Hi, hello! I am Roan May Bureta of Group 2. So in this video, we're going to talk about Philippine banking system and its role to the country's economy. First of all, what is the banking sector? The banking sector serves as the key anchor of the country's growing economy and is also a major employer as it provided millions of Filipinos. The banking sector has been important to nations' economies since ancient times, particularly in safeguarding wealth and providing credit to individuals and businesses. According to analysis, the banking sector's bottom line in the Philippines could further improve this year 2022 as the economy gradually loosens its pandemic movement curbs. However, because of that COVID-19 pandemic risks are still apparent. Now, we will discuss about the major forces that led to the growth of the Philippine banking system. The banking system plays an important role in the modern economic world. Banks collect the savings of the individuals and lend them out to business people and manufacturers. It is safe to keep money in banks and interest is also earned thereby. Thus, the desire to save is stimulated and the volume of savings increases. The savings can be utilized to produce new capital assets. Thus, the banks play an important role in the creation of new capital in a country and thus help the growth process. The banking system can create money when the business expands, more money is needed for exchange transactions. The banking system facilitates internal and international trade. This is particularly important in international trade when the parties reside in different countries and are very often unknown to one another. So how the banking sector impacts our economy? The correct answer for that question is that the banking sector is vital to the world economies. Its primary function is to safeguard depositors' assets and make loans to individuals and businesses. Banks are regulated by the federal government and sometimes state governments. Try to keep them from taking on too much risk and imperiling the economy.
Philippine banking system. Banks in the Philippines has 8 classifications which are universal, commercial, thrift banks, rural, cooperative, Islamic banks, government-owned banks, and other banks as may be classified by the Bangko Sentral ng Pilipinas or BSP. Universal banks are authorized to provide a variety of services, including investment, commercial, and development banking, as well as mutual funds and housing loans. This is how banking works. First, at the most basic level, a bank takes deposits from individuals or businesses with the promise that the money can be withdrawn when the depositor wants it. Second, the bank then lends the money it has on deposit to other individuals and businesses and received interest payments from the borrower in return. Banks make a profit on the difference between the interest rate that they pay depositors for the use of their money and the higher interest rate that they charge borrowers. It is important to note that, by law, banks cannot lend out all the money in their possessions. The rules change from time to time and vary by the size of the bank. Banks can invest their own money in other kinds of assets such as government securities. How banks are regulated. Because of the vital role that banks play in the economy, governments around the world have laws in place to try to prevent them from engaging in excessively risky behavior. Let's now move on to the structure of the Philippine financial system. And it has also 3 classifications, namely the Bangko Sentral Pilipinas, banking institutions, and non-bank financial institution. First is the Bangko Sentral ng Pilipinas. The primary objective of the Bangko Sentral is to maintain price stability conducive to a balanced and sustainable growth of the economy and employment. It shall also promote and maintain monetary stability and the convertibility of the peso. Next is banking institution. A banking institution can range from a large financial institution with a highly visible brand name and an international presence to a small organization with a local presence. A banking institution's financing activities generally involve various types of lending such as corporate finance, housing, project finance, retail, short-term finance, small-medium enterprises, trade, and others. Under banking institutions, we have private institutions and government banking institutions. In private banking institutions, we have expanded commercial banks or universal banks. We have also commercial banks, thrift banks, which are savings and mortgage banks, private development banks, stock savings and loans associations. And the fourth one is rural banks, and the last one is cooperative banks. Under government banking institutions, we have Development Bank of the Philippines, Land Bank of the Philippines, and Philippine Al-Amana Islamic Investment Bank.
Another classification under the structure of the Philippine financial system is a non-banking financial institution or non-bank financial company. So, non-bank financial institutions are a group of institutions with varying characteristics. These are non-monetary financial institutions classified into private and government, with or without quasi-banking functions. They are primarily engaged in long-term financing for the expansion and modernization of productive ventures and in facilitating short-term placements in other financial institutions. The two major classifications of non-bank financial institutions are private and government non-bank financial institutions. These are investment houses, investment banks, financing companies, securities dealers, savings and loan associations, mutual funds, pawn shops, lending investors, pension funds, insurance companies, and credit union comprise private non-bank financial institutions. For government non-bank financial institutions, on the other hand, consist of the Government Service Insurance System or the GSIS, Social Security System or the SSS, and Pag-ibig.
The next part we're going to discuss is about the role of banks in the economy. The first role is that banks promote capital formation. Capital formation meaning it funds to provide financial resources to businesses in the form of loans. In resulting, it fosters the growth of locally based businesses that will lead to economic growth. That is the first role. The second role is the investment in new enterprises. If we say investment, it makes easy for SMEs or budding entrepreneurs to acquire the loan they need to jumpstart their business. They use that in commercial banks. The provision of timely credit increases the productive capacity of the economy. Third role of banks is the promotion of trade and industry. Promotion meaning the vast expansion in trade in industry. The use of services like a bank drop, check, bill of exchange, credit cards, and letters of credit have revolutionized both national and international trade. The promotion of trade and industry is the big role of banks in the economy. So the next role is the development of agriculture. In developing countries, it now provides credit for the development of agriculture and scale industries in rural areas. The provision of credit to the agriculture sector can greatly help raise agriculture productivity and income of farmers. To the next role is the balanced development of different regions. When you say balance, it is the vital role in transferring surplus capital from developed regions to the less developed regions. It is equity balanced development. Through banks, traders, industrialists, and entrepreneurs in less developed regions can get adequate capital for meeting their business needs. This, in turn, increases investment, trade, and production in the economy. For the fifth role, it influences economic activity. When you say influencing economic activity, we said it is the availability of credit and the rate of interest. For the next role is the implementation of monetary policy. When we implement monetary policy, the central bank of the country controls and regulates the volume of credit through the active cooperation of the banking system in the country. This determines price stability and promotes economic growth within the shortest time. The non-monetized sector or barter economy is now mostly converted into the monetized sector with the help of banks. The use of money has vastly increased the volume of production of goods. The final role is to export promotion sales. In order to increase the exports of the country, the commercial banks established the export promotion cells. It provides information about general trade and economic conditions both inside and outside the country to its customers. And that's it. Thank you very much for listening to our report. And we wrap up our report with a big smile. Thank you.
Got kick.